This weekend, we have seen $1 billion worth of liquidations across the crypto market, and this has been met with some pretty mixed emotions. We've seen that the believers and the hodlers are seeing this as a buy the dip opportunity, whereas those that are fairly new to the crypto market are experiencing the typical panic and fear. So in this video, we're going to be talking about whether or not it actually is the right time to be investing in altcoins. And I'm also going to talk to you about the very real possibility of a $56,000 Bitcoin first. In addition to that, if Bitcoin really does have more downside to come, that does mean that we will see a further bleed in altcoins. So what I really want to focus on in this video is helping you to develop a plan of what to do if you happen to be very much in the red with your altcoins right now, or even if you're not in altcoins at all, but you have been waiting to invest. The same method that I'm going to show you in this video will apply to both scenarios. So you know what to do. Give that like button a tap if you haven't already done so, and we're going to get into the week that was in crypto. Now, the first thing that we really need to know is that when we have global news like what we've experienced over this weekend, when we have that happen on a weekend, all other markets are closed. So the only market that actually can react is the crypto market as it's open 24/7. And as a result, we usually see a fairly dramatic move. Like I said, it's the only market that can move, and that's why that tends to happen. So the first thing that we need to be looking for this week is how the rest of the traditional markets react when they open this week. Because if they open with a move to the downside, that's going to bring Bitcoin down further into around the 56K region that I talked about. I'm going to show you exactly why that number is on my mind, but I would not be making any premature moves without seeing how the markets open and how traditional markets are going to react. So let's take a look at the S&P as an example. So the last price action that we have for S&P was on Friday. So we don't really know how this is going to react when the markets open. We need to wait for this reaction here. It's possible that we have a retracement up to the 200 EMA, considering we've crossed it now, before further downside. If that happens, then we would have more downside, most likely on Bitcoin as well. If it can manage to reclaim the 200 EMA though and start to change structure from there, then we should be okay. And that might be where we will see a bounce in cryptocurrency. When we look at the NASDAQ, it's essentially ranging. It's got lower highs, but equal lows. It's essentially just in a range. And the DXY, we know, started pumping as a result of CPI this week. So we need to see when the market opens if that's going to continue to the upside as well. If it does, that again could be bad for crypto, could mean further downside. So these are the main things that you want to keep an eye on when the market opens this week. But when it comes to crypto specifically, if you're panicking right now, first of all, stop. Second of all, just understand where we are in the cycle. Because right now, like in this whole period of time, we are literally in the pre-halving retrace period. I'm going to show you this tweet here from Rex Capital. And he talks about the 3 phases of the Bitcoin halving: the final pre-halving retrace, the reaccumulation, and then the parabolic uptrend. Let's have a look at this chart here. And so this is the period of time that we're in right now. This is the area where we should be expecting this pre-halving retrace. So everything is kind of on track for that currently. But what follows that is a reaccumulation, and then we have the post-halving parabolic upside. So essentially what this means is that if this is the pre-halving retrace, it could literally be the final bargain buying opportunity for the pre-halving period. But does that mean buy the dips this weekend? I don't think it does, and especially if you're in the red on your altcoins. I'm going to show you a better plan that will help you to know that you're actually buying at the right time, as opposed to just buying dips that keep on dipping, because at this point in time, we don't actually know how bad things are going to get. So with all of this in mind, let's talk about altcoins. So with a bleed like this, buying the dips isn't necessarily the smartest idea, because the dips can just keep on dipping. We can see on the dominances right now that the Bitcoin dominance is currently rising. And when we have a look at the total market cap, excluding Bitcoin, we had a massive drop in that as well. So the combination of those things means it's not exactly the smartest idea to be buying altcoins right now. But what you can do is plan ahead. If you are currently massively in the red because of altcoins, or you don't have a portfolio at all, What you should be doing is building yourself a watch list of coins that have performed well throughout the cycle so far, because those coins are the ones that are likely to have the biggest rebound when the market reverses. Now, if you are in the red, you can use those high performers when the time is right to buy them. And when they do have their stronger rebound, they are going to bring your overall portfolio back into profit, even if the coins that you have now are currently sitting in the red. So when you're judging your portfolio, you need to judge it as an overall portfolio, not coin per coin, because you could have some in the red, you could have some that are extremely in the green, and overall the whole portfolio is still profitable. So don't worry too much if you just have one or two coins that are significantly in the red right now. You can plan ahead, look for those high performers so far, and look for the right time to buy the dips on those. So speaking of the right time to buy the dips, let's talk about that. And I'm going to use 𝗟𝗵𝗃𝗃 because we've been talking about this on this channel for quite some time. And what we had identified, and it started to look so great, we had identified a W formation in a vector candle zone. We talked about this last Sunday. We were waiting for the breakthrough, which happened, the run to the 200 EMA. Now, on this period here, I talked to you about two possibilities, one being a consolidation, one being a retracement back to the 50 EMA. Both of those are what tells you that the trend is about to change, and they confirm the W. So as long as this retracement creates a higher low, the W gets confirmed. And at any point, if it fails that W is not confirmed. And this is what has happened. So this is a really good example to show you how the first part of a W formation, this is why it's called an aggressive trade, because you don't have a confirmation of the trend change yet. The confirmation happens after the higher high and then the higher low. So you can see here we didn't actually get confirmation of the trend change because we broke back down below the first peak of the W. So that just means now we have to reset everything. And so this is what you should be doing with all the altcoins. Number one, build a list of coins that have performed really well so far this cycle. And then once you've done that, you want to be comparing those coins to Bitcoin. So you don't want to be looking, for example, at Link USDT. You want to look at Link BTC, and you want to wait for Link to turn bullish against BTC. So if we zoom out on the daily chart for Link BTC, it's another thing. You want to be doing this on a high time frame chart because we're looking for a macro trend change. And if we look at Link, we can see lower highs have been forming for a really long time. M formations, you can basically see them everywhere. We have equal lows here, basically where price is right now. And we can see that those equal lows are in this vector candle zone right here. So if Link BTC was to hold this level when the market opens sometime next week, being a higher time frame, remember it could be next week, it could be next month, because I'm looking at this on the daily time frame. It would take a while to form a W, but that's what you would be looking for, is to see the trend start to change now before you went and bought any dips on something like Link. As an example. Now, I'm not saying to go and buy Link. I'm literally just using a chart to show you an example of where it would be smarter to buy on dips in a situation like this. Normally, I'm happy to buy dips when we're in an uptrend. But when it comes to global macro news, like what we've seen this weekend, we don't have any guarantees that the market is going to rebound next week. So this is not a situation where I would buy dips. This is a situation where I would wait for the market to show me that the bottom is in, and that can only happen if we don't revisit the bottom. Now, of course, in addition to this, you have to know what Bitcoin is doing, because without understanding what Bitcoin is doing, you could again see even further downside on your altcoins. So let's take a look at Bitcoin, and I'm going to start on the daily chart because there is something interesting here I want to show you. We've been talking about this pattern here for again, a long time, but we talked about the 3 hits in rise 1, the 3 hits in 2, and we're still waiting for the 3 hits in 3. Now, I've noticed some people who started trading this method are saying that this is possibly the 3rd high, and then this here is an M formation. Yes, that's possible. It's absolutely, definitely possible, and you should keep it in mind. But to me, I would have expected something a bit bigger for the 3rd rise. So I'm still hopeful. And the reason that I'm hopeful is, number one, I can see a retail pattern break. Okay. So we had the false breakout to the upside, talked about that on this channel. We've got this break to the downside. Is it another false one don't know yet, but either way, that triangle is invalid. We shouldn't really care about it anymore. And when you remove it, you can see that Bitcoin is essentially just in a range. It's come back a number of times to this daily vector candle right here. It has not yet broken below it. We've got essentially equal highs. We can identify trap traders to the top. So if the market maker wants to keep those trap traders trapped, then at the best, we will probably get a lower high form before we see further downside. And on a lower time frame, this would equal a 3-level drop, which I'll show you that on a lower time frame in a second. But the reason why I'm interested in a play like this is really a lot of reasons. Number one, it would be a return to these 3 fast vector candles. Usually when you have 3 fasts in a row like that, we will come back to revisit at least one of them. At the time that it does that, our daily time frame 200 EMA is going to do something like this. So it's likely we will meet one of these vectors at the same time we meet the 200 EMA. And if we do that, that's extremely bullish still. That would mean that this is just a pullback and that we are bullish. Currently, we do have buy orders in the heat maps at about $54,000. Now, there are orders before that. So again, this isn't a guarantee, but I'm going to show all of them to you where they are currently at the time of filming this. We've got significant orders at 62,925. And then we've got a big cluster here between about 60,000.5 to 59,650, which would just be revisiting the wick that has been created so far over this weekend. And then finally down here, we have 54,000. So we know there's interest there. So now I'm going to put on the 7-day heat map to show you where all the liquidity is. And you can see here that this red zone that I've previously marked, I marked that based around all of this liquidity right here. And that's sits between 55,000 to 58,100. So it's about a $3,000 range, but there is a lot of liquidity there. If they did want to give us that lower high and come down one more time, then it's likely we will come into this zone. Now, the only way I think that will happen is if when the markets open, they react badly to what's happened this weekend. If we don't get a reaction to the downside there, this may not happen because essentially we're in a range and we're holding the low of the range. So we would start to just look for market structure to change out of this. On lower time frames, we would look for higher highs, higher lows, and then we would make the assumption that that was it. That's all we're going to get to the downside, and they're actually coming for this liquidity to the upside next. So know that this sort of an idea is very much dependent on what happens when the stock market opens this week. So keeping that in mind now, let's go and have a look at what has happened this week, how the model has played out so far, and some things that we need to be aware of as we go into a new week. And this week in particular, looking at the 1 hour time frame, we can see here that we saw the false move week beginning take us to the upside and the trend changed to the downside from there. When we came back to repeat the high of the week this week was at about 71,500. So when we came back to repeat the high of the week, you can see I've got these 3 circles here. These 3 circles here is part of the method. It's called 3 hits to the high of the week. And essentially it's a reversal signal. If a lower high follows after, if a higher low follows after, then that means we are going up instead. Now we identified this in the Discord earlier this week as it was happening. I actually recorded a video on it, so I won't play the video, but you can see here how I have them highlighted before that breakdown happened. I identified the trap traders right here and that we had the 3 hits, and that's the high of the week right there. And essentially we broke down the end, which is what I was saying in this video, is if we get a lower high next, we're going down. Now let's have a look at the price action. There's your lower high right there. So that is a very typical reversal signal as part of the method. A lot of the community did catch shorts there. I'm not sure how long they held on to it, but then we can see obviously a very dramatic move. We came back to retest this level here, which might be hard for you to see on the screen, but it's essentially the 50% area of the high and the low of the week at 67, let's just say around 68,000. So it's halfway between the high of the week and the low of the week exactly. And you can see wick perfectly touched that level and rejected again for a second leg to the downside. Now this, I actually took a long position here myself and I got stopped out, but I am still short from here. So it's okay. My short has made up for it. But I originally was hoping that this here was a H pattern. It was a the Friday false move, and then we would just trickle up. Now, this was obviously prior to us hearing about Iran's attack on Israel, so I didn't know that that was what was going on. But based off price action, I was hoping that was a H pattern, and turned out it wasn't. Now we have a similar story here because price is currently retesting the low of the week at 64,500. So it's another rejection zone. And if we cannot get back above that and start to change market structure, then we may be coming down for those lower levels that I talked about between 55 to 58 region if we do come down another level. One thing though, even if we do break above the low of the week, because of the timing, because we're in false move week beginning, I wouldn't be surprised if we came up to the 50 EMA as a retracement and then came down again, depending on how the rest of the market opens. So if the rest of the market opens, I mean, by the way, the false move week beginning is going to happen everywhere. It's not specific to cryptocurrency. This whole method is based off a Forex method. So the same thing will happen anyway. We have to be very, very cautious of how we trade this week because a false move could have us come up for a really quite a pump to the upside, because don't forget, we're going to have a CME gap now. So at some point in time, there's going to be an intention to close the gap. We'll have a look at that in a second. And that could look like a full-on trend reversal before more downside. So really, I think it's going to be tricky to catch the start of the week trade this week. And it's probably almost just going to be a matter of taking a chance on it if you do feel like you want to buy the dips. The US settle price is here currently. So it's at about 67,000. If we come up, that's essentially where the CME gap is going to be. So if we come up here and we couldn't get through it, again, that's where we could see another leg down. And the false move could take us up there just to close the gap before we head down further. So I do think it's going to be tricky. I don't think it's all that wise to trade smaller time frames this week unless you're, already short and you're just waiting to see if there's going to be another leg down. But for long positions, essentially we know where the trap traders are. So that's the first question is, can I identify trap traders? Yes, I can. They're right here. Okay, trap traders are always in the last large wick to the downside, but then that has to follow with a W formation. You have to line up the levels and everything like that. And right now we're at the low of the week. So I would not bank on this being the moment to buy dips just yet. But what I will say is that this period of time that we're going through right now, it really could be the setup for something amazing to happen soon. All I really want to caution you about in this video is just be very, very careful of buying dips just because you have large red candles. Just make sure the dips aren't going to keep dipping, because we're in the whole period. We're in that phase of time where we're expecting a pre-halving correction, which is what we're getting now. But if you pay attention, if you stay focused, if you manage your fear and your FOMO, then wait for market structure to change. Look at the Bitcoin pairing of the coins that you want. And when they start to turn around, that's going to be your best time to build your altcoin portfolio or fix up your altcoin portfolio that is currently in the red. And then the work is going to be done for quite some time, because the thing is this, whilst we are in the phase of the cycle where we have that pre-halving dump and especially the altcoins get really quite badly wiped out, what follows that is the best part of the cycle, which is basically the parabolic rise. So that is what could be coming next. And that's why, regardless of how you're feeling now or what may have happened to your portfolios over the weekend, this really could be your best opportunity to buy and then just ride out the rest of the cycle.